Hello students, in this session you will know about the different terms of accounting which will be used at the time of accounting, in which the first is entity. Entity means reality that has a definite individual existence, like Superbazaar, Hire Jewelers, ITC Limited, with the name of any company, any firm, any person. All those accounts are opened and these are known as separate entity. Next is transaction, an event involving some value between two or more entities for purchase and sale of goods, payment to creditor, receipt of money, incurring expenses, earning income, etc. It can be a cash transaction or any credit transactions. Means whenever any economic event is occurred between two or more than two entities are known as transaction. Now next is assets. Assets are items of value used by the business in its operations. This item will be shown in the asset side of balance sheet. These are classified into fixed assets, are assets held on a long term basis, for example, land and building, plant and machinery, furniture, etc. And current assets are assets held on a short term basis, that are debtors, bills receivables, stock, cash and bank balance. Now next is liabilities. Liabilities are obligations or debts that an enterprise has to pay at some time in the future, which are divided into long term and the short term. Long term liabilities are those that are usually payable after a period of 1 year, that is a term loan from financial institutions, debentures, bonds issued by the company. Short term liabilities are obligations that are payable within a period of 1 year, that are creditors, bills payables, bank overdraft, etc. And next is capital. The amount invested by the owner in the business is known as capital. It is shown in liability side of balance sheet. It may be brought in form of cash or any assets by the owner. Generally, a businessman starts the business by investing some cash, stock, building, plant, machinery, etc. All those are known as capital because this liability is felt by the business towards the businessman. Next is sales. Sales are total revenues from goods or services sold or provided to customers. Sales may be cash sales or credit sales. Next is purchase. Purchase are total amounts of goods procured by a business on credit and on cash for use of sale. For example, goods purchased for resale to earn profit. Generally, business purchases goods for resale, not for use. These are basic terms which are used in accounting. Thank you, students.